Hello everyone, you're watching Sahab Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Sahab Academy. Now let's go to the video. Hi everyone, welcome back to the second video of Islamic finance, this topic of financial management that we have started. Now in the previous video, in the first video of Islamic finance, we have discussed a brief concept about it, and we have also seen that this system entirely relies upon the Islamic law, or in Arabic it is also called as Sharia. Fine. Okay, and then we also discussed about a bit history over there. You can see that in the previous video, that not that important, but the most important thing is the principles of Islamic finance. Yeah, this is very important. See here, principles of Islamic finance. In Islam, interest is completely forbidden. Yeah, you can't use money to make money. Paying or charging interest from people is completely forbidden in Islam. All right, so if any transaction involves interest, then that's not allowed in Islamic financial institutions, right? And then investing in businesses involved in prohibited activities. Yes, Islamic financial institutions, they can't be involved in any businesses which deals in prohibited activities such as gambling, prostitution, pornography, and then alcohol, the businesses which deal in alcohol, pork. Yeah, all these are prohibited activities in Islam. Music industry, yeah, all these things. Fine. So if any businesses are involved in these activities, they can't get credit or anything from Islamic financial institution. They can't get in contract with Islamic banks. Fine. And then speculation is also not allowed. Okay, you can't deal in futures market or option market, right? And then uncertainty and risk. If any contracts where the terms of the contract are not clear, not clearly mentioned, and they depend on some future event, then that's also not allowed. All right, because there is too much risk. It is equal to gambling. Yeah, both of these things are like gambling only. So that's a prohibited activity in Islam. So you can't deal in those type of transaction and those type of contracts, such as complex derivative instruments and short selling are completely prohibited. Fine. And the main principle, one more principle, is the risk should be shared. Yeah, the risk of any contract between the lender and the borrower must be shared. Fine. That's the main principle of Islamic finance. Fine. And then the last is wealth must be generated from legitimate trade and asset-based investment. Either it should be asset-based or asset-backed. All right, for every transaction there must be an underlying asset. Yeah, you can't just use money to make money. That's just interest. All right, you can't do that. So that's the last principle of Islamic finance. Fine. So I hope you have recalled whatever we did in the first video. Yeah, if you want to go deeper, then please go in the first video and watch it again. All right. Okay, then I will put the link in the description below. Now coming back to this video, in this video what we're going to do is, in this video we are going to see different forms of contracts of Islamic finance. Yeah, different types of products or the services that are offered by the Islamic banks. Fine. So what are the allowed ways to do banking? That's what we are going to see over here. Now as you can see, the principles of Islamic finance, there are so many restrictions. So tell us what is allowed. Yeah, this is it, right? These are the 5 major contracts that are allowed in Islam. Fine. So now let's discuss this one by one. Mudaraba, musharaka, sukuk, ijara, murabaha. Yeah, let's discuss this one by one. Okay. Now here we have the first contract of Islamic finance. See here, mudaraba. Mudaraba is same like partnership. Okay, partnership or joint venture. Here what will happen is, here there will be 2 persons involved. Okay, maximum 2 persons only. Yeah, it can't be more than 2. So one party will bring the capital. Yeah, one party will bring the money and the other party will bring the skill. Yeah, it's a partnership transaction where one party supplies the money, 100% of capital, and the other provides management expertise. Yeah, other party will bring the skill. Now this party who brings the capital will be called as money supplier or financer in English, but in Arabic it is called as, he is called as Rabb al-Mal. Okay, Rabb al-Mal. And then the party which brings the skill, the management expertise, the labor provider who will do all the work, yeah, this person, the working partner, will be called as mudarib. Okay, so now this person who is the money supplier, the financer, he will only contribute capital. He will not participate in management. Okay, he will be the sleeping partner, working partner, sleeping partner. Is that clear? Right. So now here what will happen, this business, either this business will make profit. If it makes profit, then it will be distributed in the pre-decided ratio. Okay, the ratio, the profit sharing ratio will be decided in beforehand itself. Okay, but if in case, God forbid, there is a loss, then entirely the loss will be borne by the financer. Okay, the Rabb al-Mal, the money supplier, the person who has brought in the capital. Entire loss will be borne by the the capital provider. Okay, why is it like that? See here, because it is considered that, you know, this person has done his 100%. Yeah, he has participated and he has worked really hard, and still he couldn't earn profit, he couldn't make profit in this business. Then it is believed that, it is argued that, you know, he has done 100% of his work, so he can't be penalized. Yeah, he can't be, because he doesn't have the money, that's why he has only brought his skill. Yeah, he doesn't have money or anything, so that's why he can't bear the loss. Only the finance provider will bear the loss. It is argued like that in Islam. Okay, is that clear? So this is what mudaraba is. Only two people, one will bring the capital, other will bring the skill. Yeah, if there is a profit, it will be divided in the, it will be distributed in the pre-decided ratio. Yeah, and if there is a loss, the loss will entirely be borne by the capital provider. And there is an exception over here. If this person is involved in some fraud or anything, yeah, if the loss is because of his negligence or he is guilty, then the loss will be borne by this person. Okay, in case mistake is there by this person, clear? Otherwise, normally the entire loss will be borne by the capital provider. This is what mudaraba contract is. Simple partnership. All right, now let's see another one. Now you can pause the video and take this note if you like. Yeah, otherwise just continue on. Now here we have the second form of contract. See here, musharaka. Now musharaka is also same like mudaraba only, but there are big differences. So see here, it's a joint enterprise or partnership structure. Yeah, same like mudaraba only, where at least two parties or more. Yeah, that's the main thing. Here the parties can be more also. In mudaraba we saw there will be only two parties, right? One Rabal Mal, the finance provider, and one the labor provider, mudarib. But here it's not like that. Here the parties can be more. Yeah, multiple parties can be there. Yeah, so see here, multiple parties can be there. They will bring their capital as well as skills. Bring capital and skills, and everyone are working partners. Yeah, or they can be sleeping partners, but everyone can be what? They can be working partner. They can participate in the management of the business. All right, and these persons, the partners, they are called as musharik in this contract. Okay, musharik. Everyone are musharik. Fine, everyone can participate in management. Now the main difference here is, if there is a profit, then the profit will be distributed in the pre-decided ratio. All right, whatever they decide in the beginning itself. But then if there is a loss, then the loss has to be strictly, it has to be distributed in the capital ratio. Okay, whatever capital they brought, in that ratio only the loss will be shared among them, bared among them. All right, so this is what musharaka is. Okay, the main difference is the loss difference. In the mudaraba we saw the loss is entirely borne by the finance provider. Yeah, but here the finance is provided by everyone. So what will happen here is that the loss will be distributed in the capital ratio of the mushariks, the partners. Clear? And one more difference was that everyone are working partner over here. Everyone can participate in management, but here only the skill provider, the manager, he's the manager, right? He's only participating here in mudaraba. In mudaraba, I mean, yeah. In musharaka here, everyone can participate in the management of the business. Clear? So this is what musharaka is. Simple, very simple. Now let's move on to the third contract. You understood, right? Musharaka, nothing, it's simple. And then we have sukuk. Now what are sukuk? Sukuk are the Islamic bonds, you know, the bonds that are structured in such a way as to generate returns to investors without infringing Islamic law that prohibits interest. Now normally, conventionally, what happens? Yeah, normal bonds, how are they? When the company issues bonds, the conventional bonds, then they pay interest on them to the bondholders, right? If you have purchased the bonds, that means you are receiving interest from them. Yeah, you as an investor, if you have purchased any bonds, then you will be receiving interest from the company which has issued the bonds, isn't it? Yes, that's what conventionally normally happens. But here in Islam, interest is completely forbidden. Interest is not allowed. So if interest is not allowed, then how can bonds work? That's what you have to think about. All right, so here the bonds are structured in such a way to generate returns to investors without infringing Islamic law that prohibits interest. Interest can't be there in these bonds. In this these sukuk bonds, interest are not there, but investors are getting returns. How does that work? Let's understand this. See here, sukuk aims at profit sharing by offering the investor ownership in business and assets. Now let's take an example and understand this. See here, let's say I have a company, right? And let's say this company issued bonds. Yeah, sukuk. It issued sukuk. Sukuk are issued. Fine.
So now let's say you subscribe, you purchase those sukuk. Now you will be paying money, right? So I'm getting dollars, I'm getting money. So now what I'm going to do as a company, first I will appoint a manager, sukuk manager, right? So that sukuk manager will be, managing everything related to these sukuk bonds. Fine. So now what the company will do is company will purchase an asset. Normally, why do you raise debt finance? Mostly to purchase asset, right? So what you're going to do is you are going to purchase an asset. The company is going to purchase an asset, right? So now what the company will do is company will give you ownership in those assets, because which money is this? This money is of bondholders. You are a bondholder, right? Why you are a bondholder? Because you have subscribed to the bonds, the sukuk, right? So you will get ownership of the asset which has been purchased from your money. Yeah, the cash flow which the company will get from you, after issuing the bonds, from that they will purchase the asset, and the ownership of that asset will be given to you, to the bondholders. Fine. So when you become owner of something, then you are entitled to the benefits and risk coming out of that asset, right? So whatever income that will be generated from that asset, you will get a part of that. So that's how you will receive income from these bonds. Okay, you will not get interest. Okay, interest is completely forbidden in Islam, you know that. But here in sukuk there is a profit sharing objective by offering the investor ownership in asset, right? When you get the ownership, you are entitled to the benefits as well as risk of that asset. So whatever money has been generated because of that asset, a part of that will be sent to you. It will be given to you, it will be distributed to you, right? Participation in profit. That's how you will participate in the profit of that asset, because you own it, right? You as a sukuk holder. Fine. So this is how sukuk works. So unlike conventional bonds, sukuk are linked to an underlying tangible asset. An asset will be there. You remember the last principle of Islamic finance? Wealth must be generated from legitimate trade and asset based investment. Okay, this is what it is. There is an underlying asset over here. You are not just getting interest. No, you are not getting interest over here. You are getting profit, you are getting income over here from the asset based investment. Okay, is that clear? Easy, right? So this is what sukuk is. All right, simple. Okay, and then the fourth type of contract we have is ijara. Ijara is similar to a lease contract. Okay, so when we think about leases, what comes to our mind? We think about the principal amount plus interest. Yes, that's how leases works, isn't it? The lessee will make payment to the lessor for using the asset, and that payment will include what? Principal amount plus interest. But now here in Islam, interest is completely forbidden. So how lease contracts are gonna work? How is it gonna work? So see here, that's what we have to understand. An ijara transaction is the Islamic equivalent of a lease contract, where one party, lessor, allows another party, lessee, to use their asset against the payment of a rental fee. Now here, since interest is forbidden, so a predetermined rental fee will be agreed upon between the parties, the lessor and the lessee, and that rental fee will be paid, which doesn't include interest. It is a predetermined fee. Okay, it's not like compounding interest and all. All right, yes. So now let's understand that in very much detail. See here, let's say you need a car and you don't have money to purchase it outright. Okay, immediately you don't have money to purchase it. So what are you going to do is you are going to approach Islamic bank, okay, and you will get an agreement with them of a ijara. You will get an ijara contract. Now what is this ijara contract? What will happen is, see here, as I said, you need a car, so bank will purchase the car and make the payment in whole in one go, right? So they will make the whole payment to the vendor, and bank will instruct the vendor, this Honda showroom, this manager, to deliver it to you. Okay, so the car will be delivered to you. Okay, you will have the possession of the car, and you will have to make an initial deposit to the bank. Okay, initial some money you have to pay to the bank for the guarantee or something. But the ownership of that car will remain with the bank. All right, the ownership will remain with the bank. So whatever benefits and risks are there of that asset, of that car, will remain with the bank itself. So if there is any major maintenance cost, if there is any maintenance, then the bank will have to bear the maintenance cost and everything. But if there is a minor maintenance or something, then you will have to bear it yourself. But now, how you are going to pay to the bank? You are going to pay in form of rentals. Okay, the rentals will be agreed in the beginning itself. Okay, predetermined rentals. Fine. So you will pay the rentals, and at the end of the lease period, yeah, you will also decide the lease period also with the bank at the beginning itself. So at the end of the lease period, what will happen is, at the end of the lease period, the bank will give you option. Do you want to buy the asset? Yeah, buy the car just by making some extra additional payment. Yeah, a new agreement will be made. Or do you want to return the car back to the bank? Yeah, that's the option will be given to the lessee. Yeah, to you. Fine. So this is what a ijara contract is. All right, it's a simple contract. You understood this? Initial deposit you will make, bank will purchase the car for you and make the payment to this Honda guy, yeah, this manager. Then this manager will deliver the car to you. He will give the possession to you, but the ownership will remain with the bank, and bank will, bank will be responsible for any maintenance cost and everything, because the risk and reward are with the bank, because they have the ownership, right? So yes, and you will be paying regular rentals to the bank, and at the end you will be given the option either to buy or return the asset back. Clear? This is what a lease contract is. Simple lease contract. Yeah, if you want, you can pause the video and take this down, right? Okay, so now let's move on. Now here we have the last and the final contract of Islamic finance that we're going to see in this video, Murabaha, the fifth contract. So far we have covered 4 contracts: Mudaraba, Musharaka, Sukuk and Ijara. So now what is this Murabaha? See, Murabaha is nothing but just a credit sale, okay? Credit sale contract. That's all Murabaha is. See the meaning over here. A Murabaha transaction is a deferred payment sale or an installment credit sale, and is mostly used for the purchase of goods for immediate delivery on deferred payment basis. Now you already know what is installment credit sale. If the goods are of $100, you will pay 20, yeah, in installments. But now what is deferred payment basis? Deferred payment means what? You are postponing the payment at a later date. Okay, you will pay at a later date. That's what deferred payment basis is. Simple. But now let's understand how this Murabaha will work. See, for example, let's say you need to buy an asset or some goods, and you don't have money to buy it outright immediately. Okay, you don't have enough money. You have some money. So now what are you going to do is, you have to get into a contract, a Murabaha contract with the bank, Islamic bank, obviously. Right? So now what the bank will do is, bank will purchase the asset or the goods for you, and the bank will sell it to you at a profit margin. For example, if the bank purchased that asset for $100, right? So what the bank will do? Bank will add $20 more profit, 100 plus 20, a markup, and sell it to you for $120. And in the beginning only, it will be decided. Yeah, the markup and everything will be decided at the beginning itself. It is not like the bank will hide any terms of contract from you. Okay, they will disclose everything, so it will not be injustice to you, right? And then what you have to do is, after getting the asset, you have to pay in form of installments. Okay, whatever you agreed upon, yeah, in installments or on deferred payment basis. You can also promise them to pay at a later date. Yeah, that can also happen. Yes, simple. Yeah, this is what Murabaha is. Yeah, you want an asset, you approach to the bank, bank will purchase it for you and sell it to you with a profit margin, cost plus profit. You have to pay in form of installments or deferred payment basis. Clear? That's what Murabaha is. Simple as that. Easy. So now what I'm gonna do is, I'm gonna add timestamps in the video. If you want to revise or go back to any of these contracts, then just go to the description and see the timestamps and go back and watch these. Okay, fine. Okay, then see you in the next video, right? That's it for today.